Good afternoon, everybody. Welcome to my weekly video update on the markets. Today is Thursday, November 15th, 2012. I apologize for not getting at you right after the election. I wanted to, but for some reason my computer camera wasn't working and I wasn't able to record. I apologize about that, but it's miraculously fixed itself, so here I am. Three things I'll talk about today are the elections, the markets, and your accounts. First off, with the election, after months of billions of dollars is spent and candidates dragging each other through the mud, we haven't had much of a change. We still have the same president, the same Senate, and the same House. There have been a couple changes inside, but the majority that were Democratic before, or what was Democratic before, is still Democratic, and the House is still Republican. However, since then, we have seen a sell-off in the markets. The S&P is down about 7% from where it was just several weeks ago, and where the correction is going to stop, we're really not sure. I don't think, though, the correction has anything to do with the election. The market did have a big sell-off the day after the election, but I think that had more to do with some really bad news that came out of Germany. And as you can see today, there's an announcement that that Europe is back in a recession, and that's the second one since 2009. And I think that really is having a drag on our markets here. Plus, the fiscal cliff and the uncertainty is not helping, but I don't think that really is the main cause. Looking at the markets on a technical level, and I will include a chart to show you, we have broken the 50-day moving average, which is more of a 3 to 6 month look at the market, on its momentum and how it's trading. That's something that I follow pretty closely. However, longer term, there's the 200-day moving average, and I know you've heard me talk about this before. The 200-day moving average hasn't been breached in a very long time, and it's just been breached over the last week. That shows that there is some longer-term weakness in the market. We'll see if it can recover from that, but that is a sign that you really do need to be very careful. Fortunately, when the S&P 500 breached the 50-day moving average to the downside, which was over a month ago, we did take some positions off the table, especially the large cap dividend stocks, which make up the majority of the S&P 500. Since then, we have held our fixed income accounts, and some other positions we did have to take off just to make sure we protect the accounts at all times. Finally, the last thing I just want to say is, I want to wish everybody a happy Thanksgiving. Thanksgiving happens to be my favorite holiday of the year. It's to me, it's just always been a holiday that it's just not commercialized, which is so nice. And and it's also nice to get a day off during the week, but that doesn't have anything to do with it. But Thanksgiving is something that always means a lot to me. I hope it does to you. And sincerely, happy Thanksgiving. And if you have any questions, please feel free to give me a call. And like always, thanks so much for being my client. Have a great day.